Hey, what's happening with the real estate market up here in North Florida, and especially the Jacksonville metro area? We've seen all the headlines. All you see is about that a crash is coming, foreclosures are coming. Of course, the interest rates are up. The bubble's about to burst in Jacksonville. Well, we're about to find out in this show right now. Hi, I'm Tom Kerr, and I'm your host of this show, Bubble Watch. That's right. This is Bubble Watch Season 2, Week 8. That's right. It's the second year I'm doing this show, the beginning of the second year, Week 8. I've already got over a year's worth of data to share with you where I follow this trend and see what's happening if that bubble's getting ready to really burst. Hey, I'm just a regular guy who happens to be a real estate agent up here in North Florida. And because of that, I have access to an MLS account. And every week I share the back end of my MLS account to look at those real numbers in real estate, and I put them into charts for you. We look at some graphs, and then you can track what's really happening in this market. Hey, after watching this video, if you like what you see, give me a thumbs up. And if you'd like to use me as your real estate agent up here in North Florida to buy or to sell, then give me a call at this number or shoot me an email. Hey, you know what? Let's get to it. We've got a lot to go over. The pendings, the solds, the active listings, and I'm going to look at the MLS right now for those active listings. Okay, here we are in the Northeast Florida MLS system, and we're going to take a look at what's active right now. Homes that are active for sale up here in Northeast Florida is 5,753. All right, next I go and look at what sold in the last 7 days. Okay, up here in the Northeast Florida, it's 594. Next, I'm going to take a look at what's contingent taking backup. That number is 833. And let's see how many went pending in the last 7 days. That number is 709. Now, for those of you that are new to the show, let me explain that real quick. Contingent taking backup, those are under contract, okay, but they have a contingency. Usually it's financing, an inspection, or an appraisal, but it could be anything, okay? The next is pending. Next step from contingent taking backup, after the contingencies are removed, then it goes to pending status, and from there it closes. But not all pendings close. All right, let's look at the rest of these numbers. Okay, the amount of homes that were withdrawn in the last 7 days, that number is 86. And those are people that took their houses off the market. And it could be for temporary reasons, such as maybe they needed to make some repairs, or they had some family coming in and staying over the weekend and couldn't clear the house out for showings. Either way, it's still under contract, but it can't be shown. Next, we're going to look at expireds. Now, the houses that expired in the last 7 days, we had 212. Okay? Now, those are homes that didn't sell and the contract expired and they're now off market. All right, next we're going to take a look at the new construction and take a look and see how many new construction sold. And this is in the last 7 days. That number is 172. And how many new construction homes are active for sale right now? That number is 1,670. Now let's take a look at those foreclosures. Now, what I'm doing here is I'm looking at homes that are in the status, the foreclosure status, that are active listings for sale, that you can go out and buy that are in a foreclosed status. But I also include in this pre-foreclosures and short sales. So let's take a look at those numbers. Okay, foreclosures, we've got 20. Pre-foreclosures are 12. And short sales are 13. All right, all those numbers I'm going to put into an Excel spreadsheet, and then I'm going to actually fine-tune, go through all those sales, and then I'm going to break it down into the percentage of homes that sold for $500,000 or more, the percentage of homes that sold below list price, at list price, and above list price, and a whole lot more, okay? So that's coming up. Right now, I'm going to take us back and we'll look at those scary mortgage rates and see how they fared this last 7 days. Right here we are on the site Mortgage News Daily, and we're looking at the 30-year fixed rate. Ended last week at 6.91, and look at those red arrows and a couple of big red arrows which pushed us to 7.22 to end this week. All right, let's take a look at the FHA because they're generally cheaper. FHA was 6.63. It had some good solid red arrows and hit the 7 mark. Okay, now let's look at VA, which is also usually a better rate than the conventional. And there we are, same thing. We were at 6.63 for them last week and hit 7 this week with a little mix there of red, but we had there was a big jump there, as you can see, the second one from the bottom. Okay, now the next thing I look at, I'm going to look at these graphs that show us, that we track the price per square foot, the inventory, the median price, and days on the market. So let's take a look at those because they all play into this big picture to see if, everyone's trying to catch when that bubble's going to pop, all right? And so let's take a look. First off, let's start with the price per square foot, and this is the Jacksonville area. Well, as you can see, we were flatlined right here, okay? And for this like 7 weeks, we popped up last week, and we stayed right there where we're at. We didn't go down. Now, what makes this more interesting is when I look back at over a year from last year. And we see there last year in July, the price per square foot was still going up, and then we have that big slump. And this here in 2022, man, everything was falling down. People were tumbling. Then all of a sudden, look what happened. It stopped, flatlined, and now we're going back up again. So this gives a real good look at this and really something to watch. All right, let's look next door at the inventory. As we can see, the inventory's been on the downward slide, and this is part of the problem, what's bringing up these house prices, because you still have buyers out there. But if we look at, let's see, the 1 year, you can see how the inventory rose, and then went down. Now, if you noticed, if you look real close and zoom right in here on this spot, you can see it's starting to turn where that inventory is going up a little bit, and we'll see if it reflects in our numbers that we pulled from the MLS. All right, the next thing we're going to look at, those median prices. And look at that. I mean, they continue to go up. Okay, this is 6 months. Let's look at it from a year. From last year at this time, it was going up, stopped, and here was that, last quarter, there of 2022 when everything was skidding off the cliff. But boy, oh boy, look at this, okay? Now remember, you were told that it was probably going to be down in here we were going to see this, and a lot of people didn't expect it to turn. Myself including, I didn't expect it to turn this much. Okay, days on the market, next one. As we can see here, it's been gradually going down, then it stops and holds off a little bit and goes down. Well, as asking prices, when people buy and it's above asking price, that causes those days on the market to drop a little bit. So that's why we watch those above list prices, okay? Because this could be a trend going there, and then that pushes those price per square foot and those median prices up altogether. Let's look at a headline that goes along with a lot of what's going on here. Okay, this headline, what's next for the housing market as told by Fannie Mae's latest forecast, and this comes from Fortune, okay? As we see here, that Fannie Mae had predicted, okay, now this here was earlier this year, back in February, they had predicted a decrease of, well, right now the decrease is 1.2% for 2023, followed by a 2.2% decline in 2024. They're still predicting things going down, but they had predicted in February, okay, 4.2% in 2023. That's a dramatic change, 4.2 to 1.2. I still think they're off. We're seeing things going up. There's other people disagreeing, saying things are still going to crash, that are coming down, that the worst weeks are still ahead of us, and they got the recession word playing around a lot out there. All right, Also, take a look at this. Why did Fannie Mae revise its home price? It boils down to the fact that there's an ongoing shortage of homes for sale, what I've been saying. Down here you see the demand for housing has exceeded expectations, and they give a few reasons: baby boomers aging, Gen Xers locking in historically low rates, all these things. The bottom line is that there's people looking to buy homes still, and there's a shortage of homes. Okay, right here we're looking at the main chart, and we're here at Season 2, Week 8, okay? And we're looking at the first one right there is what we looked at is the active listings, 5,753. Now, what we do is we compare these with the previous weeks. As you can see, and I got them highlighted in yellow, okay? These numbers from the MLS, the current weeks here. So as you can see, the next one back is Week 7, Week 6, and Week 5, all of Season 2 right here. Okay, now, what we do is look back at this. So here we see 5,753 were this week. Last week it was 5,775. Before that, 5,716 and 5,683. So we see that the inventory did drop a little bit this week where it had been going up a little bit. Next, we're looking at the solds. 594. Okay, we're still climbing. Next, we're looking at the contingent taking back up, 833. That's dropped a little bit from last week. Pending, 709, and that's up a little bit. That went pending. So we look at the total here, 1542, and that dropped a little bit from the last couple weeks. Okay, next is withdrawals, 86. That's up a little bit. This number would surprise me. Expired, 212. So that could be that a lot of these houses are still overpriced. And well, not only that, but with the interest rates going up, that a lot of these houses are pushed out of people's monthly payment. And on top of that, the insurance. Once they go and find out about getting their insurance, and then they find out what that premium is, holy cow, you know, it pushes some people right out, so they're not buying the house. Maybe they were going to buy the house, they had an offer on these houses, and because this doesn't show that, okay, so it shows that they could have had an offer on it, and then it was just too much money once they went through, you know, their contingencies, okay, and found all that. Like during that inspection period, they checked on the insurance and saw, well, we're not going to be able to afford this because we thought the insurance would be, you know, $200 a month, and now it's going to be $400 a month. All right, let's look at the new homes. Okay, new homes here, 172. So that's been a jump. Take a look at this. Back here, okay, week 5, 96, week 6, 113, week 7, 150, and then 172 over here. New homes available for sale, 1670, dropped some from last week, and could be, you know, I mean, the difference here, we saw a lot more homes, you know, being sold. Now over here on the column right next to that yellow one, see where I got Season 1, Week 8. And what I do is, I just go back to the beginning when I've tracked this. Like I said, I've been tracking this here all the way from May of last year. So we look at Week 8 back then, I take those numbers, copy them and paste them over here so we can compare, and then the percentages over here on this right are your year-over-year percentage and change. So we see we have an increase, for example, right here of the actives, that 14% over last year. And then we look at, you know, the solds, okay? So our solds are a little bit down from last year, but not much, almost the same. And then you just follow it all the way down to the contingent, the pending, total under contract, withdrawals, expireds, new homes sold, and then also new homes that were active listed. So as you can see, especially those new homes, we've got more homes for sale now than last year, and we're also selling more than at this time last year. And you can look at this chart and follow it all the way around. Now I wanted to say, you know, these charts, and we're about to look at the next charts I got, when we look at the, you know, homes that sold for 500,000 and above, and then also below list, at list, and, you know, an above list. This full Excel spreadsheet is available from a link from my newsletter. I do have a weekly newsletter. It comes out every Tuesday, okay? And you get a little bit more than what is on the Bubble Watch show. in essence, like you're going to be able to get my whole Excel spreadsheet, and then you can look through all the numbers yourself without looking past all those videos. And then you'll also see the MLS data sheet for those houses of the week and a lot more that I show in the weekly newsletter. All right, let's look at that next chart. And by the way, too, with the newsletter, if you want the newsletter, all you got to do is just email me and tell me you want to be put on the newsletter. Or you can text me, too, and I'll do that. Just text me your email. All right, here we look at, well, that isn't right there. That's should have been 8. Okay. Season 2, week 8, and we see homes that sold for $500,000 above, 27% an increase. Homes that sold under list, 63%, same as last week. Homes that sold at list, 16%, down 1. And homes that sold above list, then up 1. Where that went down, had to go somewhere, went up. And like I says, let's watch these homes sold above lists, because this is what's driving prices up. Also, it's driving down the days on the market. Next, let's look at how did people finance these houses. All right, here we are, week 8 of season 2. 27% cash. Now think about that. Now it's over 25%, so that's over a fourth of the homes sold right now are still cash deals. I mean, that's incredible. So if you're involved in a multiple offer against a cash deal, then it makes it a little bit tougher. It all depends on what the offer is and all that. I mean, it doesn't mean you can't win. I've had people win, okay, because, you know, it's all up to the seller, you know, what they want to choose. But I still think it's amazing that we're still strong with cash offers, this high a percentage. All right, what about conventional? You see the conventional mortgage, 39% of those. That dropped a little bit there. But the FHA picked up some, 15%. VA dropped 1 at 16, and the others came in at 3%. Okay, the foreclosures. Okay, we had week 8 here, 20 foreclosures, up 3 from last week. Pre-foreclosures, though, went down, short sales down. For the total, stayed the same at 45. So again, we do not see that dam breaking on the foreclosures as we were told. Okay, let's look at the new construction. New construction here. 54% of homes sold under list. That's a drop from the last few weeks, okay? Homes that sold at list, 16%, staying about the same. Homes that sold above list, 30%. Man, you know, and we got to watch this too. I've been getting a lot of emails showing these price increases on these new homes. And they're selling, and obviously we see the sales are up with this new construction. Okay, my next chart has to do with the sales by counties based on an MLS called MLS Advantage, which takes in a lot of these other boards. I'm in the Northeast Florida MLS, which is the biggest one up here. And there's other smaller boards around, say like in Flagler County, St. John, St. Augustine, things like that. And we do cross-sell. I sell over there in Palm Coast and Flagler County. You know, I'll sell in St. Johns County. They come over and sell here. So my Northeast Florida numbers don't show these smaller MLSs, you know, cross-selling and what they're doing. So I do look at the MLS Advantage. Now, the last couple weeks, they haven't been keeping up. But this week they did. So I filled in the numbers from last week, and I've got the numbers to show you. We'll put it together here for this week. And what we came out here with, and when we break it down by county, we're showing that Baker County this week had 4, Union County had 1, Bradford 2, Clay County 101, and Clay County is just south of Duval County. Nassau is 81, Duval 266, and that is Jacksonville itself for the most part. St. John's is 94. Flagler had 145. Putnam was really down to 19, for we had a total of 713. 713, think about that. That's pretty incredible with these interest rates, with these prices, and still 713 sold up here in the North Florida area. Okay, now we go on to question of the week and then homes of the week. Okay, and the question of the week, and again, if you want to skip to the homes, that's fine. But these are questions that people actually ask me. And a lot of you probably already know the answers, but a lot of you out there may not, and this would be the first time you're hearing it. A question I get is because, I mean, I'm in the business, so, everything's, the knowledge is there for me, but, somebody, it may be the first time buying a house or they haven't bought a house in 20, 30 years and forgotten stuff. They ask, when I go out and we're getting ready to put an offer on a house, they see a house, they want to put an offer. Some people think that you have to give the deposit when you put the offer in. Okay, so like a binder deposit is generally due, after the contract. So they'll ask, do I have to give a deposit, when I submit the offer? And the answer is no, because the deposit is only due, it's part of the contract that's written in there, how many days it's due after, everybody signs. So after the contract goes in force, usually it's 3 days, but it could be, you can put whatever you want. Some I've seen them as 5 days, and that money goes to whoever holds it in escrow. Usually it's the title company, but it could be an attorney's office, and it also some brokers actually do hold the binder deposits. But no, you do not have to give a check or a deposit when you submit the offer. It's only after your offer gets accepted. All right, now we're looking at houses of the week. All right, and let's start off with the house that sold above list. And we've got one that sold below list. That's how we do the house of the week. So we're going to start off with the one that sold above list. Okay, this house here, as you can see, was listed for $340,000, on the market for 4 days. There we go. These houses that are above list, that sell above list, drive down that days on the market. So of course they didn't reduce the price any, and it ended up selling for $360,000, so $20,000 above list. Now this particular house also, they gave them a $2,500 credit towards closing cost. And the reason that would happen in an above list situation like this, you don't need to use it. It probably wasn't a negotiating tool for that so much, but they probably, that part is why the house price went up some. So because the person didn't have the cash to bring to the table for all the closing costs, so they needed some help with that. So they bring the price up of the house out, and so the seller just, okay, well, we'll bring the house up, another $2,500, and I'll just give it to you as a credit. That works if the appraisal, it covers the house, the price that you're jacking it up. If it doesn't, then it's a whole different ballgame, and you're probably going to be renegotiating. All right, let's see what they paid for this house and when they bought it. Okay, this house here, they bought it on Christmas Eve in 1997 and paid $86,300. All right, let's go look at an appreciation calculator and see what they did. All right, here we are on Good Calculator site, and $86,300. They sold it for $360,000. Had it for 25.5 years and ended up with an appreciation of 5.76%. Okay, that's about what would normally be in a normal market. 5 to 6 you can expect to get. So these people went through the real crash of 2008, and then they also went through this correction that we've got right now in 2022 that we had going into 2023 somewhat. So they went through 2 of these cycles, okay, where the housing prices took a hit, and they still ended up above 5%, which is good. Something else I wanted to show you that I'm going to show this week here, and I don't know if I'll do it every week. We'll see. Maybe I will with the house of the week. But they paid $360,000. They paid $20,000 above. Let me show you some of those price valuations chart. And this actually is on my website. And also in the newsletter is a button you can push if you want to see a home's value, get an idea, and it'll take you to the site and see what these 2 sites said. One is Adam and one is Zillow on what they say that the house is worth. All right, they paid $360,000. Adam shows the value of the house, $335,342, and Zillow shows it at $341,600. So the sellers, according to these, did well in that sale. Even if it had sold at its asking price of $340,000, that was still within these ranges. Okay, this house was listed for $699,000 on the market for 71 days. Okay, over 2 months. They reduced it within that time by just only $10,000 to $689,000, but they ended up settling for $600,000 that they sold this house for. Okay, so apparently they needed to sell this house. Now on top of that, they also gave $7,500 in concessions to help toward, to help towards closing costs. All right, so let's see what these people paid for it and when they bought it. Okay, these folks bought it just last year, October of last year. Now it was sold to a corporation, so it was probably somebody that was trying to flip houses. Now, I don't recognize the name as any of the big players, so it could have been just a smaller individual person under a corporate name trying to do that. But you see, they bought it for $595,000. Okay, they bought that for $595,000, sold it for $600,000. They threw it at $699,000, figuring they'd get probably $6.5 or $630, something like that, and make a few. But they ended up at $600,000, and when you take away that $7,500 in concessions plus all the closing costs involved with it, this definitely was a loss. All right, let's see what the price estimation site shows for this as far as what its value is. Okay, here Zillow doesn't have their estimate available for this, but Adam shows it at $678,000. So these people probably did think that they could get up into that price range. But what happens is, again, like we were saying, with the insurance and the rate being 7% and stuff like that now of course this one here went under contract sooner than that, but the rates were still going up in the sixes. So for a lot of folks, when you start getting into that, up there higher sixes to seven, it makes a big difference than a $600,000 that you're paying. And it could have pushed so many people out because that buyer pool was definitely a lot narrower, and then with the rates and insurance brought it down. Hey, you know what? I give you all this information, see for yourself. Remember, we were told that last year, don't buy, everything's crashing, everything's coming down. And what are we seeing now? Now, from the first Bubble Watch show, I've always said this is a correction, not a crash. Okay, that doesn't mean a crash can't happen. That's why we're sitting here watching these numbers every week. But I haven't seen it by the numbers I've been doing for over a year. I see a big correction that happened, okay, but I have not seen a crash, and I don't see any indicators of the crash. But, what about those folks that told you last year it was going to crash? So you held off, okay, and didn't buy. So how are you feeling now? Now, if everyone's situation is different. If you couldn't, it's just like if you watched a few Bubble Watches ago, you saw where I bought a house when interest rates were at 18%, okay, but I still bought because it worked for my situation with the house I wanted where it was. Had I waited till those rates came down, that house wouldn't have been there. And you know what? I stayed in that house probably I think about 18 years. And so it was the house I wanted. And you gotta think the same thing. What can you do? Don't try to do something you can't, but what can you do? Hey, until next week, week number 9, I'm out of here.